Leveraged and Inverse ETF.
What's wrong with you? Being staring at the iPad all day long.
Oh, the stock market has jumped up and down lately. It's getting harder to figure out where to put my money. I'm going to do some research.
Come on, why don't you just go to the bank and do a CD? This is much safer.
No, be smart with your money and look for the good opportunities.
Stop daydreaming. If you make so much money, then buy me a bigger house, like a mansion.
It is the ups and downs that make investing exciting. Look, your stocks are not moving. They are flat.
What do these graphs mean?
All the prices are dropping. Oh, Grandpa, you've got a lot of investing experience, and you can bear the risk. You may consider investing in a leveraged or inverse ETF.
What are they? Can you tell me more?
Let me explain. If the market index goes up, the ETF price does too. If the market index goes down, the ETF price drops. Let me give you some examples. Normally, if an index goes up 1%, your ETF price also goes up 1%. But when the leveraged ETF comes into play, your ETF price can go up 2% or even more. Compare 2% to the 1%, your profit doubles. These kinds of ETFs have 2x in their name. Follow this scenario. Index up, ETF up. Index down, ETF down. But an inverse ETF does exactly the opposite. Index up, ETF down. Index down, ETF up. This is why we call it inverse. The inverse ETF can also have multiple profit designs, but for risk concerns, the Taiwan Stock Exchange only sets to a 1-to-1 ratio. No double, triple, or multiple. So if the index goes down 1%, the ETF goes up 1%.
Wow! So if the index goes up 5% in single day, my leverage 2 times ETF can go up 10%? Then I will be so rich!
In Taiwan, we have rules about daily price movement, a 10% up and down restriction. So the 2x leverage ETF daily maximum profit can reach 20% in a single day. If the leveraged ETF tracks a foreign index, like the S&P 500, it does not have a daily price fluctuation limit. The 2x leveraged ETF and inverse ETF can easily go with the market trend to buy or sell. Also, it can enlarge your profit. In addition, it can hedge for your portfolio. The benefit is ETFs do not require margins. Also, no maturity dates, unlike future contracts. It can also flexibly do margin trades and short sell. The 2x leveraged ETF and inverse ETF are currently listed on the Taiwan Stock Exchange and tracked in China, Hong Kong, Japan, India, and the United States market. In nature, it has high information transparency, just like a mutual fund. It can trade as a regular stock, very convenient.
If the index goes up 5% for 2 consecutive days and I buy the 2x leverage ETF, then I make 10% today and 10% tomorrow. Wow! In total, I made 20%. I love this!
The profit of 2x leverage ETF and inverse ETF is calculated on a single day basis. However, compound interest may affect the profit, so the profit may be a little bit different from the index.
What are you talking about? What is compound interest?
Compound interest. For instance, if an index goes up 5% for 2 days, the leveraged ETF will go up 121%. The profit is 21%. On the contrary, if it goes down 5% for 2 days, the leveraged ETF will become 81%. So you will have a loss of 19%. This is compound interest.
What do you mean is, if the index goes up, I can make 21%, and if it goes down, I only lose 19%? Oh, it sounds like compound interest is good for investor.
If the market movement is flat, then the index doesn't have much up and down. Investing in 2x leveraged ETFs can have a loss because of compound interest. For instance, today's index goes up 5%. Tomorrow's index drops 5%. the price of the 2x leveraged ETX will keep 99% of its original value. Then the loss is 1%. Therefore, in a flat market situation, 2x leveraged ETFs and inverse ETFs are only good for short-term investment. Under this condition, they are not suitable for long-term holding.
If your heart cannot take it, do not invest in these types of ETFs.
Except for institutional investors, to invest in leveraged and inverse ETFs, you must have experience in margin trading, or futures and options trading, or warrant trading. Then you are qualified.
My heart can take it, and I'm qualified.
Oh, and in addition, before you can trade these types of ETFs, you have to sign a risk disclosure statement. You also have to understand product features.
I know. Every investment has risk, so I have to fully understand what risk involves. Only after you have done all the homework, then you invest.